Prasan Trairatwaragun, the governor of the Bank of Thailand, said the government will review its levy of the Deposit Protection Agency or DPA fees on bank deposits in the next 3 years. In this stage, the levy will be 0.47% on all deposits at private commercial banks, up from 0.4% as the government prepares to transfer the 1.14 trillion baht FIDF debt from the Finance Ministry to the Bank of Thailand. The FIDF debt is the legacy from the 1997 financial crisis. Prasan said the DPA levy will allow authorities to pay off the legacy debt within the next 24 hours. After the first 3 years, the levy will be reviewed based on the country's band deposit base, as well as the issue of BEs or bills of exchanges. In addition, state commercial banks will also be subject to DPA fees so that they are on the equal footing with private commercial banks. Deputy Prime Minister and Finance Minister Yongkittikul said yesterday that the surcharge on state banks will be contributed to a planned national development fund and will not be earmarked for debt payment. Commercial banks currently pay 0.4% of their deposits to the Deposit Protection Agency or DPA, while state-run banks have until now been exempted from such a levy. For commercial banks, the bulk of the new fee, or 0.46% of their deposits, will be transferred to pay off the debt of the FIDF, while 0.01% will be contributed to the DPA. Critics said the additional premium that is to be imposed upon banks will have a negative impact on savers and borrowers and will also damage fiscal discipline. However, state-run banks said they would not be greatly affected by the decision that they will have to pay a surcharge, while brokers believe there will be only a minimal negative impact on commercial banks' earnings due to the premium rate being lower than had been expected.
And now on the line with us, we have Dr. Twatchai Yongkittikul, the Secretary General of the Thai Bankers Association. Good afternoon, Doctor.
Good afternoon.
How are you today?
Very good. How are you?
Thank you. Well, Doctor, since the government has finally agreed to collect the 0.47% or the 47 basis points on the total deposit, which would be used to pay for the debt of the Financial Institution Development Fund. Now, do you think that this 47 basis point is a good compromise?
Yes, it is. In fact, this 0.47% was calculated on the basis that, first of all, it would not undermine banking competitiveness.
Right.
And that second, we would be able to pay the debt. Particularly, they would not be in shortfall, at least in the coming few years. So in a way, this is a compromise.
Right. Since this is a compromise, so what is going to be the impact of the on the banking system as a whole?
Again, since we try to minimize the impact, we could have raised this higher to shorten the period of payment. I think we are quite concerned about the impact on the savers and the borrowers.
Right.
So I think the 0.47 is only a very minimal hit from the current level. So I don't think there would be any significant impact.
Okay.
Yes, well, as the result of this arrangement, the Deposit Protection Agency will only be getting 1 basis point from the contribution from the banking sector. Now, are you concerned that the DPA would be underfunded?
No. At present, DPA has accumulated a total of about 100 billion baht. That's quite substantial. Earlier, when this the bill of creating this DPA was being considered, there was a target of 200 billion baht to be collected for the fund.
Yes.
Now we can say that we are already halfway. And if we continue to collect at 0.4%, we will be able to achieve the 200 billion baht in about 3 years' time. So this is quite a substantial amount. And moreover, I think we also consider the fact that at present the Thai banking system is very strong. We have been able to go through the recent crisis without any problem. So I think the public in general is also quite confident about our banking system's strength. So I think, no, I don't think there is any concern at all about the current level of the fund of the DPA.
About the finance ministry that plans to raise the deficit protection from 1 million baht per account to a higher level later this year. Do you agree with this?
I think this is not a policy. It was just mentioned by the Deputy Prime Minister that he asked that whether this should be reconsidered. But the fact is that we arrived at this 1 million baht many years back based on the survey of many countries around the world that have protection policy, protection institute. The range that we have seen is between 500,000 to more than 1 million baht. So 1 million baht is in fact in median. And another fact that we have to consider is that about 98.6% of depositors are protected by this 1 million baht scheme. So in my opinion, it is adequate. But since this is a new suggestion from the Ministry of Finance, we would be willing to review.
Yes. And well, another type of savings is also the bills of exchange. Now, is it possible that the bills of exchange will also be levied?
Yes, it is. The fact is that in recent years, many banks issued a substantial amount of bill of exchange as a new instrument for fund mobilization. I think the fact that it is brought under this calculation is in order to to expand the base of the deposit, so that the amount collected would be larger. Banks have been informed informally about this possibility in the past few weeks, so they were quite well prepared. Of course, when this Bureau of Exchange is included in the base for calculation, it would raise the cost of fundraising for the banks. So I think it's very likely that in the coming years, bank would rely less on this instrument.
All right. Well, Doctor, thank you very much for sharing your such information with us.
It's my pleasure. Thank you
so much.
Thank you. Have a good afternoon.
Bye-bye.
Well, he did agree that it's a good compromise to have 47 basis points, and that's because he said it will not undermine the banking competitiveness. Now, moving on with our local news still, capital market representatives have urged that the government to speed up legislation against money laundering, concerned over a possible slowdown of foreign capital inflows and long-term development of the real sector. The issue was raised as the annual meeting of the Financial Action Task Force, or the FATF, on anti-money laundering kicked off yesterday in France. The meeting, which runs until Friday, could downgrade Thailand on the matter. The rating will be officially announced on February the 20th. Phaiboon Nalintarangkoon, chairman of the Federation of the Thai Capital Market Organizations, said yesterday that the FATF might raise Thailand from its second watch list to the first group, which currently includes Myanmar, Sri Lanka, Cuba, Bolivia, and Ethiopia. The second group includes Vietnam, the Philippines, Indonesia, and Thailand. Phaiboon added that Thailand would send representatives to the meeting and explain the delay in the legislation. He said that if the rating were downgraded, it would be worrisome for the capital market. He said if the government delays to fix the issue, it will either have an impact on the country's capital outflow or reduce foreign direct investment in the long term, affecting the country's competitiveness. He noted that the first watch list was close to the FATF's blacklist for so-called non-cooperative countries such as North Korea and Iran. Pathira Dilok Rung Thirapop, chairwoman of the Association of Securities Companies, said combating money laundering and terrorist financing was part of the financial sector's good governance, to which the group of 20 industrial countries have given importance. Countries that are downgraded would face more difficulty in financial transaction, as they would be required to comply with customer due diligence with a higher degree of restrictions. This would have an impact on that country's overall economy and will be limited against some funds investing in countries on a watch list.
Finance Ministry sources say that the insurance premium for a newly designed policy taken out against catastrophic floodings, storms and earthquake will be less than 5% of the insured amount, which is much lower than the market rate of 8 to 10%. The Finance Ministry and the Insurance Commission are currently working out the details of a new insurance policy after the Cabinet's resolutions to set up an insurance fund worth 50 billion baht. Meanwhile, the Bank for Agriculture and Agricultural Cooperatives, or BAAC, wants to merge its existing insurance scheme with the new insurance fund to take advantage of cheaper premiums. The source say the government is expected to decide on Thursday or Friday how much it will collect in premiums from insured individuals and businesses under the new policy. The government will act as reinsurer, taking premiums from local insurers. Local firms will be required to keep 1% of the insured amount and send the rest to the government insurance fund, resulting in the state assuming higher risk in the events of natural catastrophes such as flooding, storms and earthquakes. In part, compensation for flooding is to be limited to 20% of the insurance value, which means each household would be limited to 100,000 baht. Small and medium-sized enterprises would get flood compensation of up to 10 million baht, while large businesses would get as much as 200 million baht. However, compensation in the event of storms or earthquakes will not be limited according to the source. The insurance coverage also extends to large corporates because the government wants to persuade foreign investors not to relocate their manufacturing out of Thailand. Thai Kunti, Executive Vice President of the BAAC, said yesterday the bank also wanted to participate in the scheme as it currently runs its insurance scheme solely for rice farmers. Under the BAAC's current scheme, farmers pay a premium of 60 baht per rai and the government provides a subsidy of 69 baht, resulting in a total premium of 129 baht or 806 baht per hectare.
The Industrial Estate Authority of Thailand, or the IEAT, has been tasked with finding the best method of financing industrial estates' flood prevention infrastructures. This move came after the Finance Ministry's rejection of a plan to draw funds from the government's industrial pool. The Industry Ministry earlier planned to finance 2/3 of the cost using funds from the insurance pool, with estate operators taking out soft loans from the government savings bank for the rest. The GSB charges 0.01% on the loans for a 7-year term. Industry Minister Pongsavat Sawatdiwat said yesterday that as all the estates are privately owned, there must be a mechanism to help them through the IEAT. For example, the IEAT may temporarily have to assume ownership of the infrastructure to make it eligible for financing. Meanwhile, the Finance Ministry would be asked to extend the GSB loan term to 15 years to help ease the operators' financial burden. Yesterday, the Cabinet acknowledged the construction plans of 6 of 7 inundated industrial estates, which are slated for completion this year. The exception is factory land. Bang Pa-in Industrial Estate will require 728 million baht for an 11-kilometer flood wall to be completed at the end of July. Bangkadi Industrial Park, 272 million baht for an 8.5-kilometer wall completed the end of February. Rojana Industrial Park, 2.2 billion baht for a 77.6-kilometer wall completed the end of September. High-Tech Industrial Estate, 500 million baht for a 13-kilometer wall completed the end of August. Nawanakon Industrial Estate, 700 million baht for an 18-kilometer wall completed end of August, and Saha Ratananakon Industrial Estate, 400 million baht for a 13-kilometer wall completed at the end of August.